Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets buried in corporate filings. Today, we're diving into Fusemachines Inc. As latest report, and let's just say there is a bit of a Nasdaq drama unfolding. Ever wonder what happens when a company dances on the edge of getting kicked off a major stock exchange? Well, Fusemachines Inc. is giving us a front row seat, and we're here to decode exactly what it means for investors and the company's future. So, what is this filing all about? Well, it is a Form 8K, which is essentially a report for big events that happen outside of the regular quarterly or annual reports. And the big event here is that Fusemachines Inc. has received a notification letter from Nasdaq. Now, this isn't a casual heads up. This letter spells out that the company is not meeting Nasdaq's continued listing requirements. Specifically, they're not keeping their market value of publicly held shares, or MVPAs, above a certain threshold. For the Nasdaq global market, that threshold is $15 million, and Fusemachines Inc. has been below that for a solid 30 consecutive business days. So they've got a ticking clock. They have 180 days, which is about 6 months, until the 14th of July to get back in compliance. If their stock value stays above $15 million for at least 10 days in a row before that deadline, they'll be back in good standing. Let's talk about the stock itself. The company has common stock trading under the ticker symbol FUSE, and they also have warrants to purchase shares of common stock, which trade under FUSU. These are currently listed on the Nasdaq global market. An interesting little tidbit here is that Fusemachines Inc. identifies itself as an emerging growth company. This means they can take advantage of certain regulatory easements compared to larger, more established companies. They've also elected not to use the extended transition period for new or revised financial accounting standards, which generally means they are adopting these new rules sooner rather than later. So why is this MVPA's number so important? It is a key indicator for Nasdaq that the company has enough public float, meaning enough shares trading freely on the market to ensure liquidity and fair trading. When this number drops too low, it can signal potential issues with investor confidence or market perception. Liquid market for the companies they list. The company states they are actively looking at ways to regain compliance. This could involve various strategies, from boosting investor outreach to potentially streamlining operations, or even considering a reverse stock split, although that is not mentioned here directly. The actual outcome will depend a lot on market conditions and how investors react to the company's performance and its plans moving forward. Now, like most of these reports, this one is packed with forward-looking statements. These are basically educated guesses or projections about the future. They're telling us what they hope will happen, like regaining compliance with Nasdaq. But they're also very clear that these are just possibilities and actual results could be very different. They mention risks like market conditions and their own financial performance as factors that could impact their ability to meet these goals. They're essentially saying, we're trying our best, but stuff happens. And at the end, we have the standard signature block, which confirms that the report is being filed on behalf of Fusemachines Inc. by its CEO, Seymour Maskey. It's just the legal formality to wrap things up. Looking at this filing, what is the real story? Fusemachines Inc. is in a precarious position with Nasdaq. The market value of their publicly traded shares has fallen below a critical level, putting their listing at risk. While they have a 6-month window to fix this, it is a clear sign that investors currently value the company's outstanding shares at less than what Nasdaq requires for continued listing on its global market. This situation can spook potential investors and make it harder for the company to raise capital in the future. Their success will hinge on their ability to significantly improve their market perception or find ways to boost their stock price and maintain it above that crucial $15 million mark for the required consecutive days. It's a challenging situation, and the coming months will be critical for Fusemachines Inc. as they try to navigate this. Alright, that is our breakdown of Fusemachines Inc.'s latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.